Let's get an instant audit on it right away from Ron Davari, the founder and CEO of NewOak Capital, who's with us in New York. Good morning, Ron.
Morning.
All right, so trying to get together on fixing, as the bottom of our screen says, the financial system. A bit of a surprise to see Senator Corker join up with Senator Dodd. What will they get done here, and what does it mean for Wall Street?
Well, he's joining, first of all, as an individual as opposed to representing the Republicans. It's very important to recognize that. I think the issues are very contentious. And I believe that everybody wants to get something done because politicians have to, you know, the evidence is obviously there. We have had a financial crisis here, and so the system hasn't been working, and they need to really go back and reverse some of the laws that actually deregulated the things. But the problem is the topics are so technical.
They're so technical.
They are so technical, and the House is so divided, the Senate rather in this case. So to get to that, I don't know how we're going to get there.
And what do you think should be the biggest priorities right now?
Well, the biggest priorities is that I think they should cooperatively work with the banking industry as a whole to come up with a set of rules that everybody understands what is doable and what's not doable. I mean, the focus on the consumer protection is important, but I think that's sort of an outcome of everything else. If we have a good, solidly managed banking system...
Would you be all right with not having a specific agency? Because people like Elizabeth Warren are saying you have to have that. Otherwise, it's not meaningful reform. If you don't have an agency that deals with consumer protection, you don't think it's necessary?
I don't think it's necessary. I think at the end of the day, it's not the rules that are going to make things. You've got to get the banking industry to really become responsible. And really, the incentive system actually is the main thing that you're going to have to fix. The banking industry got into a lot of things that had nothing to do with, it was fee-oriented, supposedly, but it didn't end up being fee-oriented. It ended up piling up a risk, and the taxpayers ended up taking the ultimate, holding the bag here. And that's what we have to change. But I think the biggest thing is we got to let the big banks fail. If you don't do that, the system doesn't correct itself.
Allow them to fail, right? That's and try to figure out a way to do that. I'll tell you, the markets are very, thank you, Ron. Markets are very interesting. Absolutely. We have an instant audit on it, Ashley, right now from Ron Davari, who's at NewOak Capital, our guest this morning. How did you think they handled it yesterday, the Europeans?
Poorly. Very poorly. I think the market is very worried about the uncertainty. There was no details. They were just offering comforting words. And at this time, we don't need comforting words, we need action.
You think that the words from the Prime Minister saying that Greece is not in trouble, that they don't need help, they haven't asked for help, you just don't buy it?
No, I don't buy it. They need help. They've been, this has gone on way too long. 10 years of really not having the financial discipline. And we have let it go on, and it's been about 3 months that Greece has been under pressure. The bond has been, and the market really wants answers, and they want them to take action.
And the market has been so focused on this for the last couple of weeks. But let me shift gears for a moment this morning, because the focus is turning from Europe to China. And we had the breaking news at the bottom of the screen a minute ago that the Chinese are raising the reserve requirements in their banks. Second time in a month. They're really trying to, I guess, prevent a bubble from being formed there in China, but it doesn't help the markets in the short term, does it?
No, not at all, because we got really saved by China. They went out and they spent, and the good news in Asia ended up pulling the markets in our side of the world, but they're finding themselves that they don't want to go through the same hassles that we went. The financial crisis is like the bubble under the carpet. We're just pushing it around the world. So until we really get through a solid growth, we get into some financial discipline, both at the banking level and the governments, I think this thing is just going to be a ball being thrown around, and we have to accept volatility going forward.
I was just going to hit on that point, volatility. This is not for the faint-hearted, the way these markets have been trading the past few days, based on the constant changing news. Do you expect that to continue as long as we don't have answers as far as a bailout situation for Greece?
Listen, it's essentially France and Germany against the southern states, between Italy, Greece, and Portugal and ultimately Ireland, that they have to support these. And it's happening at the same time that they are themselves having budget deficit issues. And so I don't know exactly what they can really do. I mean, are the French and Germans are willing to give up their tax dollars to save Greeks. I don't know. Maybe
or do they have a choice?
Yeah,
Well,
I know this may end up really breaking up the whole.
And no matter what
pack.
they do, and no matter what they do, we'll move on in a second. But no matter what they do, the growth is going to slow down in Europe. It's already slow because they'll have to focus on deficits. And now maybe I don't know if you can count on China for growth if they're
this is
purposely
exactly
slowing their
the
economy.
problem. You know, for a while we got we got the governments bailing us out,
Yeah.
and now we have to bail the governments.
Right.
So and as I said, you know, we're really in a no-win situation, and the markets have to accept that there is going to be downturns, and we have to accept the fact that this is going to take a lot longer than we thought.
Yeah. All right, Ron. Thank you.
Thank
We'll
you
talk
so
to
much.
you in a few minutes. All right, just a chart. Let's bring Ron Davari back. That is kind of interesting, right, Ron? What do you make of the retail scene?
I think, you know, it's a very, very slow and painful growth, and we're going to see some volatility in those numbers. The autos obviously have been negative because of, you know, the Toyota news and all that stuff. But I think it's been a situation where the unemployment and the joblessness has been more important, and you know, it's been we're waiting to see some of the business spending to trickle down to the consumer level, but it hasn't really gotten there yet.
Do you think that December may have set up for what could look like a disappointment when these retail sales numbers come out?
That's
Retail
very
sales
possible.
in December were up 5.4%. They blew away expectations. And here we had a January that was filled with some pretty bad weather. So that could come into play when we get these numbers as well.
Oh, very much so. I think it's very hard to predict these numbers, but a lot of people are going by the retailers, you know, and the store numbers, and that is indicating that obviously the number is going to be not disappointing so far, but we'll see. The data will tell us.
That chart really was amazing to see the big fall that we had and now the climb back. Is the recovery likely to kind of level off a little bit from here or a sharp? What would you bet on in terms of, I mean, that's a big old V at the end of that chart, but what type of recovery overall
the market
will we see?
volatility is telling us that growth is not really going to be a straight line, so we're going to have some issues.
Yeah.
We haven't really addressed the joblessness and the creation of new jobs. So you can't expect, and the credit hasn't really come back to the consumer level. So you have to really look at the drivers, what's going to drive this. So far has been really the consumer confidence that has been somewhat recovered because of the markets have coming back. You know, the stock market really, this is, the way I look at it is the stock market led the consumers to go out and spend.
Right.
But the stock market is obviously faltering here, and we haven't really gone to a level where the spending has created jobs and the jobs have created, you know, the real solid consumer growth. And that's what I would be looking forward to see. How are we going to deal with the joblessness? That's really the big driver for me.
Another thing that's going to be pretty interesting as we look at these numbers is some of the trends are starting to continue. While we might not see an overall, you know, shocking upside surprise in retail numbers, we have started to see a trend where it's not just the discount retailers doing well. We started to see some individual apparel stores that really struggled during the recession start to do well. Yesterday was reporting on restaurant sales are starting to return. So there might be some individual trends that also start to emerge.
Absolutely. I mean, if the restaurants in New York City are an indication, I think I was one of 5 people in the restaurant now, I can't even get a seat. So there's some good stuff. Well, you know,
You can always get a table.
Yeah, a green handshake always helps.
That's what they say, a little greasing of the palm. All right, Ron, thank you very much. Ron will be in our internet show in the next hour, foxbusiness.com Live.
Look forward to it.